Hi everyone, my name's Darryl Panes, CEO at As Good as Gold Australia. And once again, I'm joined by my brother Brian and partner at As Good as Gold.
Good morning, Darryl.
And today it's an absolute honour to have the founder of Global Resource Investments and the president and CEO of Sprott US Holdings Inc. He is here with us today. I speak of none other than the one and only Rick Rule. Good morning, Rick.
Good morning, Rick.
Pleasure to be with you. Thank you for having me on.
An absolute honour to have you on the show this morning. I say morning here, Rick, afternoon over there, so it does get a little confusing, but interesting times, to say the least. A world, as I read it, in economic turmoil. And I think this was emphasised just recently, Rick, by a comment, a statement that was made by the Prime Minister of Australia. And I did ask this question in an interview going back 2 or 3 weeks ago, but I would really like your take on this as well. The Prime Minister of Australia said during the GFC, the economy shrank by around this is over the full time, 0.1%. And what we're expecting now is a shrinkage in the economy by somewhere around 4.5% over this calendar year. Now, that represents, I'm thinking, around 45 times the impact on the economy that we experienced in the GFC, and that was bad enough. So, keeping that in mind, I find this really hard to get my head around, that anything could get that severe. But I would really like your take on that, and if you could just explain to us what you see for all of us moving forward.
Beginning with the caveat that I'm not an economist, and I'm the farthest thing imaginable from a political scientist. As a lender, which is really my vocation, the circumstance that you describe troubles me. Not the narrative. Prime ministers and presidents are good at narrative. But the simple arithmetic is problematic to me. In addition to the fact that the intended slowdown is greater in magnitude, substantially greater in magnitude than as you pointed out, than 2008 was. The other thing that people like your prime minister and whoever our president may end up being need to consider is that each additional unit of stimulus now buys less and less economic recovery.
Yeah.
When you attempt to spend or quantitatively ease your way out of a slowdown, what you really do is you steal demand from a forward period and shift it to now. Yeah. We've been doing precisely that, by my count, since 1987. And every dollar of additional stimulus buys us less and less growth. And of course, what we enjoy now, we have to pay for later. And I can't tell you when, but at some point in time, my suspicion, albeit not as an economist, as a lender, is that the question gets called. The arithmetic that's troubling from my point of view, and I need to say this is US-centric, not Australian-centric, so your audience will have to bear with me, is that at the federal level in the United States, we have about $27 trillion in on-balance sheet liabilities. When I say trillion, people eyes glaze over because they can't fathom a number that large. According to our Congressional Budget Office, our off-balance sheet liabilities, which are to say entitlements, Social Security, Medicare, Medicaid, all those types of things, exceed $150 trillion. So in the US alone, at the federal level alone, before state and local debts, and before unfunded pension plans, we owe $177 trillion. The probability that this gets paid off is arithmetically a non-starter. You service that debt with the national income, which is taxes and fees less expenses. That number is in deficit $3 trillion a year. So how do you pay off $177 trillion debt by adding to it by $3 trillion a year? The hole's deep enough. You can't shovel your way out of the hole. I think what I'm saying is the same thing that your prime minister might have been saying,
Yes.
just from a lender's point of view. In answer to your question, how do we get out of this? I have no earthly idea.
I had a feeling you were going to say that.
It's new
Because
math.
it's
old math.
I'm glad your maths is the same as mine.
Because if you did, then you should be running for presidency if you knew how to get out of this horrible mess.
Were I elected, I would demand an immediate recount.
Yeah, I mean, look, we all know the numbers. I mean, 98 measured against gold, currency's lost 98% of its value. We've only got 2% to go, and that takes us to zero. So this is pretty much the end game. I mean, and I actually had a quick chat with you, as we know, before this interview, and there seems to be no way out of this. We're just going to go through a very difficult period, 5, maybe 10 years, and maybe you could, give me your impressions there. And who knows what we're going to see when we walk out. But it would appear as though we're going to have a reset, because currency, the manner in which they're spending it at the moment to try and stimulate this economy to continue to do so, we're running out of ammunition. I mean, there's nothing left. We can't go any further. We can't reduce interest rates by much at all, if anything. And free money, well, that's still there, of course, but you go to zero. So torrid times ahead for all of us.
Well, I don't want to be apocalyptic. I sort of agree with your time frame. I think over a decade, we sort of figure this out. Churchill said about Americans, again, I'm making this American-centric, but he said Americans always do the right thing when they exhaust every other possible option. And, with regards to off-balance sheet liabilities in the United States, it would be politically difficult, but as an example, you could change Social Security. When Social Security in the United States was implemented, the average lifespan of an American male was 66 years. And Social Security began at 65. Now, the average life expectancy of an American male is 84 or 85 years. So perhaps tweaking with the nature of our collective obligations would change. Perhaps as societies, we will determine that it's economic to do more for ourselves and rely on the Commonwealth less, particularly if there is no Commonwealth. I'm not one of these guys who believes that the reset will be apocalyptic necessarily. I think it'll be decidedly unpleasant for the 50% of Australian population, the 50% of the US population that's totally unprepared, that doesn't have job skills that are suited to 2020, that doesn't deliver enough economic utility in a free market that they can sustain their existing standard of living. This sounds harsh, but it's arithmetic. But I think it's going to require some period of time to figure it out. And I'm unfortunately not indisposed to the sense that there will be a fair amount of social turmoil between now and then. I'm old enough that I lived through the late 60s and the early 70s when there was quite a lot of turmoil on American college campuses and in American streets. And I'm afraid that, it could be that past is prologue. But I also believe, individually, our curiosity, our tenacity, our creativity has always been strong enough that it overcame our collective stupidity. And my hope is, in the case of both Australia and the United States, that individual initiative will find a way around this tremendous morass that we've dug ourselves into collectively.
With respect to precious metals, gold, silver, I mean, 18 months ago, in Aussie dollars, silver was trading at just under $20 spot. Yesterday it was trading at $34. Today it's trading at $33. But we're talking somewhere around a 70% growth, like advancement there in the price of silver. Gold up about 50% over that 18-month period. I would have thought, conservatively, that you could expect to see both metals respond over this, say, next 18-month period and reproduce at least what we've experienced in the last 18 months. What are your thoughts there?
My experience has been that the beginnings of a bull market climb a wall of worry, that you have a base building period. I've lived through two prior bull markets in gold, the 1970 to 1981 period, and then, of course, the 2000 to 2008 or 2011 period, depending on how you count. And in both of those, the first year and a half or so, relative to what came after that, was somewhat tepid. It makes perfect sense that there is a measured response to gold and to gold equities based on the experience that investors and savers had in the period 2010 to 2019. In other words, the expectation of the broad populace with regards to gold is tempered by their immediate experience, which was horrific.
Yes.
The second thing is that there is still, I think, in Australia and in the United States, a confidence in a collective form of government, a confidence in collective problem solving, and a confidence that the big thinkers, be they the central bankers or your parliament or our Congress, can somehow stick handle our way out of whatever crisis that they conjure up. I don't happen to share that confidence personally, but I would note for you in the United States again, which I think is less gold conscious than Australia, that the market share of precious metals and precious metals related assets relative to total savings and investment assets in the United States is below 0.5%.
Yeah.
Which is to say that most investors can't spell gold, despite the fact that it's a special word. I think that the circumstances that you've described, quantitative easing, negative interest rates, debt and deficits, and the market share, will conspire to put in place a circumstance where the wind continues, to be in gold sales. I would also draw your listeners' attention to the fact that most people who are gold speculators are conditioned not to gold bull markets, but rather to recoveries from oversold bottoms. There have now been 9 of those in my career. Those are different than gold bull markets. The rallies can occur in bear markets or bull markets. Bull markets traditionally are 10 years in duration. And the dimension surprises people too, not merely the 1970s dimension, which was from a price-controlled bottom. But I think that the 2000 to 2010 bull market was instructive. The gold price ran from, in US dollar terms, $252 an ounce to $1,900 an ounce. So when people say to me, Rick, this market's been underway for 18 months, the gold price has risen from 1,100 to 1,900, have I missed the boat? I need to say to them, from a historical perspective, no. And from an arithmetic perspective, unless you think we're going to quit quantitative easing, unless you think real interest rates are going to go strongly positive again, and unless you think that the deficit is going to be less than 1% of GDP, you probably have nothing to worry about. I actually think the thesis is fairly simple. It's just that people don't adopt the thesis until it's part of their immediate past. It's ironic with regards to bull markets that the bull market needs to be far enough along that it's less attractive than it was before people believe in it. You follow what I'm saying? When the price of something doubles, the price action makes the narrative more believable.
Yes.
And people pick up on the narrative after some of the most attractive part of it is gone.
Yeah. So true. Yes. If we could only get the other 99.4% of the population getting a grasp of that, how much different a world it'd be.
Absolutely.
You've said before too, Rick, that you believe that this is probably going to be, or it could be, the biggest silver market in your lifetime. Could you explain why that might be the case?
I think I might have been misquoted.
Okay.
The 1970s market, where the silver price went from $1.50 to 50.
Yep.
That was a pretty memorable market.
Yes, it was. Yeah.
The silver, I don't know if either of you were, well, I guess maybe you were around for it, but the
I was
silver
around for
equities,
it. Yep.
the silver equities unbelievably did better. Coeur d'Alene is an example, now Coeur Mining, 10 cents to $65. I don't think that this will compete with that, but frankly, it doesn't have to be a very pleasant experience.
Yeah.
My personal experience has been that gold moves first because it moves based on fear. And when gold establishes momentum, that then silver, which is more of a greed-based buyer, moves in. Silver moves later, but it moves further and it moves faster. And traditionally, the most volatile asset class to the upside is the decent quality silver companies because they're so scarce.
Yes.
My friend Doug Casey says that when the generalist money comes into silver, it resembles siphoning Hoover Dam, a large US reservoir, through a garden hose. There isn't sufficient market capitalization to handle the money that comes in. And we should talk a little bit about the dimension. Earlier, you had said if the other people come into the market. You know, when I said that the market share of precious metals and precious metals assets in the United States is less than 0.5%, the estimated high point, because they didn't keep statistics, was in 1981 at 7.5%. And the 3-decade median is mean is between 1.5% and 2%. So gold doesn't need to conquer the great unwashed, to be rude. What gold needs to do is simply revert to its 3-decade mean in terms of market share. If it would do that in the largest savings and investment market in the world, that would triple or quadruple demand for precious metals and precious metals related assets, which is precisely what I think is going to happen.
Yeah, which is huge, of course.
Yeah. So we still have a lot further to go and a lot to look forward to.
Oh, we do.
If you're buying gold and silver, not so if you haven't got any. Reminds me of a quote from Alistair MacLeod, who says, if you've got gold, something along the lines of this, if you got gold, you're fine. If you haven't got any, you have a problem. So I've got a couple of questions, Rick, that I put pen to paper here, and hopefully they make sense. As good as Gold Australia, we have always believed that physical gold and silver is money. JP Morgan said, he quoted exactly that. He said, everything else is credit. We also understand that a balanced portfolio of investments is vital for stability. But is a 5 to 10% allocation to physical gold and silver a wise decision when we live in a world of counterparty risk and the printing of paper currency is used to bail out the unsound financial institutions? Should the 5 to 10% be more like 20 to 25?
I don't think that there's a one-size-fits-all answer for that. I'm sorry not to be able to give you a headline, but I think it really depends on individual circumstances. If a new client comes to me with a retired person with no new visible means of support, and his or her portfolio is largely long bonds, a portfolio where the purchasing power will be decimated by the destruction of savings products, then I would ask him or her to have a larger proportion in gold, say 20 or 25%. The idea being that the circumstance that would obliterate the bonds would be good for gold. If, by contrast, the person who comes to me is a holder of a portfolio of developed real estate that's only moderately leveraged so that he or she can increase rents at the same time that their cost of capital stays low, to the extent that they have a built-in hedge, or to the extent that they have a business where they're price makers as opposed to price takers, they can stand less gold. What I would urge all of your listeners to do is maintain substantial liquidity. Maintaining substantial liquidity both in precious metals and also in Australian dollars. I realize that the purchasing power of the Australian dollar declines over time, but having liquidity gives you both the courage and the tools to take advantage of liquidity squeezes like we experienced in 2008, rather than being taken advantage of. Yes, buy the gold mantra, because the gold mantra is true. It's an asset which isn't simultaneously somebody else's liability, immediately exchanged, it's simultaneously a store of value. But hold the currency of the land too. Regard the negative yield you get as an option premium that you can exercise if there's a broad market or a real estate market tumble in Australia.
I've got, it's a two-part question, and that was a darn good answer. A two-part question coming up. Now, I watch, or I listen to Eric Sprott and Craig Hemke with a weekly wrap-up. I do it every Saturday morning. We get it here, and I listen to it religiously, and I love what I hear. But Australia is equal to Russia as the second largest supplier of gold to the world market. Why does Australia get overlooked in regards to the commentary? I hear what's available in the US, what's available in Canada, and Eric has spoken a little bit about the area of Ballarat, where we've got a bit more gold coming out. But very rarely, in not just in Eric's area, but very rarely does Australia get looked at as far as commentary about our gold, and yet we're the second largest supplier.
I think I do have an answer for that. Although Australia is a very large supplier of gold and is also an unsung supplier of financial and technical services to the gold industry. In other words, although you punch above your weight, way above your weight in the industry, you're a small market. And commentary isn't geared to supply, it's geared to demand. The simple fact is that 30 million of you demand less than 370 million of us. And may I say, with regard to some of your more aggressive promoters, you seem to be more interested in talking to us, fresh blood, than talking to each other. I remember in 1990 attending Diggers and Dealers, and I think that I was one of two non-Australians present. And I understood how a really pretty girl in a very short skirt felt in a bar. The fact that there was a foreign buyer at Diggers and Dealers, fresh meat, it was really an astonishing circumstance, not altogether unpleasant, frankly.
Yeah, I haven't been to Diggers and Dealers, but I've heard many stories about it. Second part of the question. Why does Australia sell all its gold? And I'll reiterate, I'll go forward in this in a minute. Why does Australia sell all of its gold, whereas Russia is building up its reserves by staggering amounts? And Australia possesses 80 tonnes of gold, which, by the way, is stored in London, not Australia, whereas Russia holds 2,100 tonne and the US 8,000 tonne. In your opinion, why would we only hold 80 tonne?
I think I have an answer. Again, I'm not a political scientist or an economist, but Australia is a functioning democracy. And in a functioning democracy, one of the ongoing themes is a war between spenders and savers. The spenders are numerous and the savers are scarce. The savers favor gold and the spenders favor social expenditure. An election in Australia between spenders and savers is the same as 4 crocodiles and a lamb having a vote over what's for lunch. And Russia is a non-functioning democracy. Putin decides, Putin and the Politburo, people who have no trust and hence aren't particularly trusted either, decide what's in their best interest, and maintaining their liquidity in gold outside the SWIFT banking system, where they're beyond the extraterritorial reach of the United States, is probably a very good decision for them. I'm Personally, I don't want to make too many comments about Australian politics. My suspicion is that only having 80 tons of gold and having so much of your foreign reserve denominated in functionally negative yielding U.S. securities is probably a collective mistake. But that's a decision for your people to make, not ours.
Yeah, 100% agree. Yeah. Darryl?
Gold. Gold has always been considered the ultimate safe haven investment. What I'd like to know from you, Rick, is how did it gain that label?
I thought about that a lot. One of my sort of investment mentors is Warren Buffett, and he refers to it as a pet rock.
Yes.
And when I put myself on a performance scale with Mr. Buffett, sadly, I'm on the light end rather than the heavy end of the scale. So I ask myself this question fairly frequently. Aristotle, I think, is the authority that we need to go back to. Aristotle said that gold was uniquely suited to money because it had utility of its own. It wasn't a promise to pay, but rather it was payment itself. A US dollar is a promise to pay by US society.
Yes.
The Australian dollar is a promise to pay by Australian society. My friend Doug Casey famously says the dollar is an I owe you nothing, and the euro is a who owes you nothing. By contrast, gold isn't a promise to pay, but rather is payment itself. It's also durable.
Yeah.
It's consistent. It's divisible. It's malleable. So for all of these reasons, gold sort of semi-spontaneously erupted as a medium of exchange and a store of value, and not just in one culture. Gold was revered in Africa. Gold was revered in the Mayan and Incan civilizations. It's odd that there was a universal acceptance of gold as a medium of exchange, as a sort of value, and importantly, as a key component in religious iconography in societies that were disparate enough that it couldn't have been imposed on people. It's something that had to have sort of spontaneously generated from people's consciousness. I guess what I'm saying is I don't know. Maybe it's so because it's so. But certainly gold has more utility than a piece of fiat currency, which is, after all, either a piece of paper or a keystroke with a dream superimposed on it.
Yeah, no, that's fair comment, and pretty much what I would have expected you to confirm. It's interesting that I've listened to a number of speakers before, and particularly Jim Rickards has made reference to the fact that the great Russian czars who have handed down wealth to their families, who hand it down to their families, and so on and so on. This is over hundreds and hundreds of years. Have a pretty simple savings or investment program, and that is 1/3 in land, 1/3 in fine art, 1/3 in precious metals. Now, you explain the situation really perfectly, because if you look at those three areas of investment, land, it's pretty hard to cut it up into little pieces. I mean, you can do it, but it's complicated. And then, of course, you've got fine art. Well, it'd be a shame to tear a Picasso to bits, wouldn't it? and provide little pieces of that. But gold and silver, of course, I mean, it's a medium of exchange, proven to be that for thousands of years. But you can exchange it in bits and pieces over a period of time, because there's all sorts of denominations. As long as it's 99.99 and you know the weight, you can effectively trade with it. It's a simple process. So, love your answer, and it just makes enormous sense. Surprising with all of that, as you've said, Rick, 0.6% of the population are into precious metals. Alarming, to say the least.
Yeah.
Especially during these periods of economic crises. Yeah.
My last question for this afternoon, Darryl will finish off. On the subject is on holding physical gold as compared to holding mining shares on a percentage basis. I've done well for both. I do own obviously a lot of gold and silver, and I own some very good mining shares. And by the way, your associate gave me a number on my mining shares, and I was really rapt because I know somebody else who I know who's an economist, and he got marked down to about an 8 or a 9, and my numbers were 4. So I was pretty rapt in that. Anyway, my question. What, in your opinion, should be the percentages when it comes to shares? Should we look at as well as the overseas market, or concentrate on finding the best within our own market? And does the age of an investor become part of the equation?
I think the question was the answer. I think you framed it brilliantly. There is no one size fits all answer. There was a time in my youth when I held no gold. I didn't have anything to lose. So I was trying to make money, and I owned the mining shares, and in fact, the speculative mining shares. Mercifully, that worked out for me. I don't need to build wealth anymore, although I enjoy it. And to be realistic, I shouldn't even need to own gold. I'm the largest shareholder of Sprott. If gold does well, Sprott will do well. I will do well. But the truth is, for me personally, gold helps me sleep nights and stay calm. And so I own gold almost as a consumer good. I mean, it's almost a psychological palliative to me. The caution that I would give your listeners, which will probably make me unpopular with them, is that with regards to the gold equities, the beta in a gold bull market, that is to say, the performance of the index is so outstanding that taking a whole bunch of risk to outperform the market is stupid. You can, by poor stock selection with a speculative portfolio, turn what should have been an 800% gain into a 50% loss, which is a bit silly. For many investors, rather than buying even an index fund of the 40 biggest gold companies in the world, buying the 5 or 6 best gold companies in the world, being willing to underperform the index in return for giving up all risk is probably a very good idea. Now, I can say that without any fear that any of your listeners will try it, because they all want the 10 to 1s and the 20 to 1s. I certainly enjoy that. I certainly approve of the fact that people should have some amusement with their money. So I would say, with regards to the speculative part of your portfolio, irrespective of the size of that portfolio, the number of names in your speculative portfolio should correspond with the number of hours per month you're willing to spend accurately working on your portfolio. And by accurately working on your portfolio, I don't mean dreaming about how high the stock can go. I mean reading the annual report, reading the national instruments, reading the proxy statements, reading the quarterlies. If you're willing to spend 10 hours per month, you can own 10 stocks. But too often, when I offer to rank stocks, people will send these absolute laundry lists to me, 80, 90 stocks. And when I have discussions with these people subsequently about why they own what they own, they don't even know what they own. This isn't even speculation.
No.
This is a sort of a manic form of gambling. And so I would just say, and I know it's really boring advice, but employ common sense. Own gold, physical gold, until you feel comfortable that your family can survive the circumstance that's suggested to you by the arithmetic of the social expenditure relative to the wealth of your society. In my case, that's a reasonable amount of gold. Own the senior gold producers, the best of the best gold companies, if you believe, like I believe, that we're 1.5 or 2 years into a 10-year market, and we're maybe a third of the way through the price escalation. Own them in a way that in your own mind corresponds to how much beta you want to achieve relative to how much risk that you want to run. And then speculate with an amount of money that you could lose half of if you're wrong, because all of us are often wrong, in a number of names that corresponds with the number of hours per month that you're willing to spend doing hard work, understanding your portfolio.
Fantastic. I will get a lot of questions from my clients on what you've just said, and I will reiterate exactly how you said it because I think it's perfect. Darryl?
Rick, many years ago, I attended a seminar. A gentleman by the name of Charlie Tremendous Jones, an American, who I got to know really well, said that life was all about the people we meet and the books you read, and I convinced that he was absolutely and totally 100% correct. I developed a relationship with my lifetime mentor many years ago, about 40 years ago, and he's been of wonderful assistance to me and is responsible pretty much for where Brian and I are today. I mean, he's had a huge impact on our lives. What I'd like to do is ask you a question right now. If you were to provide, if you just had two opportunities to provide two great pieces of advice to budding investors, young investors in particular, all around the world right now, you're limited to two. What would you suggest to them? What would be those two wonderful pieces of advice?
In terms of making money, don't worry about making money. Worry about generating utility for other people. Think about a hole in the market. Think about a hole in the company that you work in. Think about whatever economic activity that you're involved in. Forget about your salary. Forget about your commission. Forget about making money. Make yourself indispensable to a customer. I stopped worrying about making money when I was 30. And when I stopped worrying about making money and started worrying about delivering utility to others, within 6 months, I was making stupendously more money than when I was worried about making money. If you deliver value, the money will come. That's a guarantee. Don't worry about your end until you've established the fact that you deserve an end. And I would say that the second advice, and maybe I can say this now because I'm old and rich, is that the essence of wealth is enhancing your sense of well-being. And if your well-being is not primarily tied up in your financial circumstance, worry a little less about your financial circumstance. If your sense of well-being is tied up in your community or your family, worry about that. 2, don't let the pursuit of wealth detract you from maximizing your sense of well-being. I have some very wealthy clients, who could afford to lose lots and lots and lots of money, hundreds of millions of dollars. But a small loss causes them so much trauma, I've suggested to them that they can't afford to speculate because it drives them so damned crazy. You know, if the essence of wealth is enhancing your sense of well-being, figure out what it is that contributes to your sense of well-being and pursue that. From my own standpoint, I grew up in a household with a single mother who was a teacher. And towards the end of the month, we were consistently concerned about liquidity. And the first thing that was important to me as a teenager was making sure that when I became an adult, that neither I nor my family had to worry about that. Once that became accomplished, and once I began to understand that in terms of building wealth, I needed to worry about delivering wealth to others. My life came into a much better perspective. What gives me pleasure now, I mean, 2 things do around business. One is securities analysis. I love doing plain old-fashioned securities analysis. I'm actually a credit analyst at heart. The second thing is mentoring, doing precisely this. And the consequence of that is that I do no administration. I'm actually barred from, by the Sprott hierarchy, from doing any compliance or administrative work. It seems that I'm counterproductive in those roles. And so I do 2 things. I do mentoring and I do securities analysis. And the consequence of that is I'm ecstatically happy.
Yeah. Like, I am not surprised, Rick, by what you've just said. In fact, it's pretty much what I would have expected. Great minds think alike in respect that, I go back to my lifetime mentor, and he would say, and you could relate perfectly with this, he would say, Darryl, success isn't determined by the amount of money you make, but what you become in generating it. Interesting. Right on line. Look, I really thank you for that input. And it's, as I said, what I would have expected. Okay. I would really like to thank you on behalf of Brian and myself for supporting this channel today. Loved the interview and gained a lot personally from it, as I'm sure our viewers would have. What I'd like to do now, though, Rick, is suggest, because we've got a lot of viewers, a lot of subscribers, who would love to connect with somebody like Rick Rule. Why wouldn't you? And so, especially after that input that you just provided. So, how can people make contact with you? I know that you've provided some really good information of late, reads, restocks. If young people, it doesn't really matter, but anybody wants to get more involved in mining and getting a better understanding, the opportunities that exist, how can they make contact with Rick Rule? What is the process from here?
I'm 67, so they need to act quickly. I'm almost at my sell-by date. There is a web link, the address being Sprott USA /rankings. Any of your audience that goes to that will find a web form. If they enter their natural resource stocks on the web form, please no banks, no tech companies, no cannabis companies, I will rank that portfolio personally, 1 to 10, 1 being best, 10 being worst, right, and comment on individual issues where I think my comments have value. In addition, I'll send 2 wonderful illustrative tools to everyone. The first is a 50-year copy of the Barron's Gold Mining Index, which I include because it's the longest running and broadest gold equities index in the world. I'm not doing it for reasons of technical analysis, which I'm no good at, but merely as a visualization tool to look at the anatomy of a gold bull market and talk about where we are relative to former markets, which I think will validate the case that I've made in this interview. The second thing that I'll send is actually ultimately more interesting than the first, which is a 100-year commodity chart. Any Australian that doesn't understand the place of commodities in the world economy and the extraordinary volatility and cyclicality in commodities markets and the unbelievable value offered up by commodities from a historical perspective needs to see this chart. I'm not suggesting that we're going to have a general commodities bull market anytime soon. But Australians from a commodity-centric economy need to understand the place of commodities and the behavior of commodities in various economic periods. I mean, I'm not for government dictates, but it is amazing to me that your government hasn't encouraged every single Australian to look at this damn chart. Anyway, enough about the chart. I will respond to any inquiries with rankings and both charts. And I'm certain that people will feel grateful for all 3 components of the offer.
Oh, I'm sure they would. And I would suggest that they do act quickly, and not because you are 67, Rick, but because they really need to, because that information would be absolutely powerful. And so what an opportunity to take advantage of.
Fantastic.
The other interesting thing about what Peter said was that so many people like yourself, Rick, are so comfortable in providing time to those who are looking for it and are genuine with their requests. When they want information, generally it's forthcoming from people like yourself, and you are to be applauded. So thank you so much. Really appreciate your input today. We know you're an incredibly busy man, and we're just indebted to the time that you put aside today to spend time with us. Really appreciate it. And so I guess at that, we'd like to, after having thanked Rick, thank our subscribers, our viewers as well, because they continue to support this channel. And until next time, stay well, stay focused, and bye for now.
Bye for now.
Thanks, Rick.
Thank you.
Bye.